AMC is back into the 40s and things are looking great right now. Now guys, I know the excitement is fading a little bit. I know that people are trying to look at other things. I know what's going on in the AMC stock community, but you should absolutely be thrilled about the added risk to the hedge funds that we are sitting at $40 per share right now. And that's exactly what we're going to be going over in this video. We're going to talk about all of the additional risk because we're sitting in the 40s that the hedge funds now have to deal with and why it puts us that much closer to the AMC stock short squeeze. So of course, guys, if all of this sounds like something you're interested in, let's get started. What's up, everybody? I'm Clay. I'm here to make 2021 the best year ever. If you haven't clicked that subscribe button, make sure to subscribe to the channel. Join us. Become a bro. We are here every single day, and we are growing our portfolios together. If you haven't bought any AMC yet, it is not too late. Use the link in the description below for Weeble. Sign up, grab a couple shares, and get ready for the short squeeze that you guys are not going to want to miss out on. Here's the deal. There are very few risks that the hedge funds take on that can add so much negativity to their portfolios that they no longer want to hold on to these short shares. Let's talk about a few of those because at $40 per share, guys, I don't know if you realize this, but every dollar that AMC increases, it causes a $100 million loss for the short sellers. Okay, every dollar, there's roughly 100 million short shares. I believe Ortex is estimating it to be about 91 million right now. So every dollar that AMC raises or rises in price, the hedge funds that are shorting it lose $100 million. Okay, that is a huge risk for them. Now, additionally, on top of that, we've got roughly 30,000 options that could expire in the money if AMC closes above $40 per share tomorrow. Now, I don't know if that's necessarily gamma squeeze material that we could see, a gamma squeeze into next week as hedge funds and short sellers and these market makers go out to cover these calls that they went out there and sold at $40 per share. But it certainly doesn't hurt. It only adds to their risk that we're sitting at a very significant level right now. And I'm not going to guarantee anything, but I feel like we're going to have a battle for $40 tomorrow. It's really going to see whether or not we can push above and we can stay above and we can have all of these options expire in the money. So right now, they're losing another $100 million, $200 million because we rose a couple dollars in price today. Then they have the risk of the options expiring in the money and a potential gamma squeeze next week. But here's what we really need to look at, guys. Some of these risks, there's nothing they can do about it. As volume decreases, the days to cover rises. And it's very difficult for me sometimes to see too, like everybody wants high volume because they think that high volume drives the price up. It's not always the case, okay? I know we see that quite often if we've got a lot of FOMO buyers jumping in and they're driving the price up because we got an influx of buying pressure. Sure, but you can have a very heavy sell-off where a lot of people are selling the stock, and on a high volume day, the stock price goes down. So, we need to stop correlating high volume with higher prices. High volume means more momentum, more volatility, and so on. But so lowering volume is another great risk for the hedge funds that could cause them to want to sell their stock in AMC, or not sell, but close out their short positions in AMC. And then people think that, well, this can just go on forever. Okay, they can go out there, these short sellers can go out and short AMC and keep that position open forever. And although it's true, okay, they can go out there, they can short AMC stock, and they're never required to return that share based on any specific date. Okay, it's not like an options contract, it's not like a futures contract, it's not like a derivative that has an expiration on it. They can keep that position open as long as they want, unless they get margin called. Okay, if they get margin called, they're required to sell it, or they're required to go out there and buy AMC to return those shares. But a lot of people misjudge the fact that they pay daily interest. Okay, now right now the daily interest or the cost to borrow is relatively low on AMC. The utilization rate is only sitting at about 88 or 86%. I'm not exactly sure which one it was. It's roughly in the mid to upper 80s. This means that there are still plenty of shares available to borrow, and therefore the cost to borrow is not going to go up. Okay, cost to borrow is sitting around 1 to 1.5% annualized interest. Annual interest. The hedge funds can definitely afford a 1% interest rate, 1% annual interest rate to keep those shares alive. But as less and less people allow their shares to be lent out, as more of those shares are borrowed, so the short interest rises and the availability of lenders declines. These are two ways to increase the cost to borrow and increase the utilization rate. As this happens, that cost to borrow goes up. Now, back in May and into June, we saw the cost to borrow rise to roughly 80%. Why would they ever want to keep their short positions alive at an 80% annualized interest rate? The most they can ever make if AMC goes bankrupt is 100%. So they're not going to keep that position alive, knowing that they have to pay an 80% annualized interest rate every day. It's charged daily that they have to go out there and pay in order to just allow that position to ride. They won't do it. That is probably one of the biggest risks, okay? If we eat the supply and do not allow them to borrow it, that means we buy the shares, we hold the shares, and we aren't trading the shares. That decreases the supply and therefore increases the days to cover. That means they can't get their hands on shares even if they want to. They can't buy them. They're unavailable. That's a huge risk. The fact that they're paying daily interest and we're not lending these shares out, that's a huge risk. As the price rises and they're losing hundreds of millions of dollars every time the price goes up by $1 or $2, that is a huge risk. I don't know if you guys realize how risky of a position the hedge funds are putting on themselves right now, but they're playing you in the media, okay? They're playing you in the media saying that AMC is drastically overvalued, it's going to come back. They want you to think that it's going to come back down in price. They want you to think that the AMC stock short squeeze is over, and they want you to think nobody else is holding, just you. And if you feel alone, if you feel wrong, and if you're no longer convicted in your position, you will sell it back to them, and they know that. Guys, it's all psychological from this point out. We own the stock, we own the supply, and we will absolutely charge them whatever price we want. So let us know down in the comments below if you think the risks are increasing for the hedge funds, and every day that we do that, we are getting closer to the AMC stock short squeeze. And if this button right here is still red, make sure to click it, subscribe to the channel, join us, become a bro. We are here every single day, and we are growing our portfolios together. And there's some links in the description down below for Binance, for Webull. Make sure to sign up for those to make your deposits. You're going to get a couple free stocks, some free crypto. Check that out. And then ClayBro883 on Twitter and Instagram. And of course, guys, until the next time, hope that each and every one of you have an awesome day.